Hey, welcome everybody. August 13th, the Market Update Desk with Scott Riley, NMLS number 157524, our direct number 616-293-2189. Well, we have a great day going on so far. The producer price index, which is the measure for wholesale or producer inflation, came in cooler than expected by a tenth. It came in at 0.1% versus the estimates for July at 0.2. Year over year producer inflation fell from an upwardly revised number of 2.7% to 2.2%. That's a big drop. This figure was beneath the expectations by a tenth again of 2.3%. So you can see where these numbers are going, getting closer and closer to that 2% target of everything for the Fed. So these are great numbers that we're getting in. Now, the core rate, this is one, the Fed looks at the core rate much more because that strips out volatile food and energy, came in at flat, 0%. We got a goose egg for last month. Last time we had a goose egg was early last year in 23, I believe. Now, that's versus the expected at 0.2 up. So much better than expected. Year over year, the core PPI fell from 3%, tumbled all the way down to 2.4%. We now have a 2 handle and are rapidly approaching a 1 handle for core PPI. Now, the estimates was actually 2.7%. So you can see all these numbers were very positive and well received within the market. Now, goods for energy prices all rose, and even still, we had some very benign readings, as you can see from these, due to the services decline. We're now seeing services prices move lower, which is very important because the Fed is very much focused on the services aspect. Bond prices, what did they do? Much more favorably, they took this information. Now, what this does is it also bodes very well for the August 13 PCE report, because of a lot of the data that is compiled within the PPI flows through into the to the PCE. And that's going to be the Fed's favorite measure of inflation. So right now, the 10-year bond, I think it got as low as 3.83, and we're hovering around 3.85 right now. Just a couple days ago, we were pushing that barrier, the 4%. So we're seeing where we spiked up when traders took a lot off the table and they started the carry trade changeover, and now we're coming back down. Tomorrow is going to be the big one, even more than the PPI. So the CPI, which is the consumer price inflation. Now, there's varying estimates that are out there that are being reported for the July, and general market consensus is a 0.2 increase in readings for both headline and core, and for the year-over-year figures to decline by 0.1%. Now, in particular, the Cleveland Fed believes there's going to be no progress on either headline or core, and year-over-year is going to be flat. So we're hoping the Cleveland Fed is a little bit more conservative on those numbers than what we'll actually see tomorrow. The last report, one of the reasons we're really positive is because the last report, we finally saw shelter costs start to moderate. And that makes big progress on inflation because shelter makes up 45.5% of the core index. The comparisons from last July for shelter costs are going to be a very high comparison number that's going to fall off of 0.478%. So if we see another reading of 0.2%, we could see some really nice progress. Motor vehicle, that's the second big one that's been just pulling at our hamstrings on inflation. Year over year, it's up about 19.5%, but starting last month, we're starting to see maybe a little bit of moderation on these readings. The comparison for last year's is also pretty high at 2% increase. If we see another number similar to last month's 0.9%, that gives us a dual benefit between shelter and motor vehicle insurance that are going to help us. Bottom line, I think we're going to have a positive report on CPI tomorrow. That's kind of our estimate and our thought process on CPI going into it. Mortgage-backed securities, like I said, they're benefiting. They're up about 18, 19 basis points right now in the positive territory. 10-year bonds have pulled back and are down to about 4.85 right now. Could we dip below 4.8 tomorrow into the four? I'm sorry, 3.8 into the 3.7s? I think we got a shot. I think we got an opportunity. You also see some balancing within the stock market today too. Less of these wild fluctuations. Next week's going to be some big earnings weeks, and then the earnings reports, and then the week after that. The week after that, you actually get NVIDIA, which is the 900-pound gorilla in the stock market right now. So we're curious to see what's going to be happening there. Hope you like this information. Go ahead and follow us on all our socials, the Market Update Desk. We'll keep deciphering this information and get that out to you. Senior analyst Mr. Gibson is taking some much-needed time off. He really scared us on Monday. He hurt his back again, got him into the vet. So we're making sure senior analyst Mr. Gibson is getting all the bouginess that he needs to help him recover. Give us a call. We'll help you get pre-approved, work to get offers accepted, and help give you the knowledge to make wise decisions on the market. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon.